This is the Real Estate Power Play Podcast, getting you the information that you need to be a successful real estate investor. Hosted by Mark Monroe, Ronald Walker, Gabe Rodarte, and me, Marty Grizzanti. Combined, we've done thousands of real estate transactions. So get ready for real stories and true case studies on finding deals, growing portfolios, and making money. Welcome to the show.
What's up, everybody? Good morning, and welcome to the Real Estate Power Play Podcast. We have Mark and Ronnie here. So all three of us are going to talk about some really cool topics to help educate and just give back. This is a way for us to give back and help the community grow, as we like to see other newer and novice, even experienced real estate investors just grow their business. And hopefully today we could give some good tips on just positioning yourself for the rest of this year, as we see the market shift a little and move into a different cycle, as we all can see. So if you like what you see here and makes you laugh, makes you have a good time, and you just grab a bunch of content from here, then just like it, share it with some of your friends or whatnot. So that's it, guys. Let's get moving forward. So Ronnie, how you been, man?
I'm doing good, bro. I'm doing good. How are you?
I am fantastic, man. Fantastic.
So yesterday I went and looked at this house, and I got some new Air Jordans that I was wearing, and went there, and I come to this house. Stupid mistake. The guy even told me, he's like, "What are you doing?" Walked in, the house was full of cat piss and dog feces, and it was horrible. I'm in my brand new shoes. I'm like, this was terrible. I shouldn't have done this.
That's too funny.
Anyway, I peeked in, walked in a little bit, took some. I already had pictures, so I took a few pictures, and then my contractor actually walked through it. And I was like, "What do you think?" He's like, "Yeah, we're not doing this one." I was like, we've already got some animal smell that we have to deal with in another one. So anyway, that happened yesterday.
That's funny, dude. That's funny.
What's
What's up, man? What you up? You got a funny true story?
Yeah, no, I'm just getting settled back in from being in the south of France, the French Riviera. I had a great time down there. Made it to the Cannes Film Festival towards the end of there, and then went to Saint Clair area. Beautiful, absolutely stunning. Elon Musk was there. There's a wedding. Saw a lot of the celebrities. So Elon Musk was there with his 27-year-old new girlfriend. And
nice.
I live in Boca Raton, and I thought we had a lot of money in that backyard with these yachts. But these yachts back here look like rowboats to the super yachts that we saw out there.
Really?
Just insane. It was just
some of the photos you were sending. I'm just going, oh my gosh, man, these things are amazing.
Did you see? We went to Monte Carlo outside the casino. Did you see those cars out there? The video. I mean, it was just insane.
There was like $1 billion in cars, and that just little video you did.
Oh, and then we stayed at the Marriott over there, right? And it's right there in the water, and the helicopter pads are there. So it's a helicopter taxi. So all they're doing is just picking up people, bringing them out to the yachts, picking up people, bringing them right out to the yachts.
Oh my
gosh. Just like it was quite the experience.
That's awesome.
Well, that's awesome.
But yeah, I'm excited about this topic.
This is good.
Yeah, so it's definitely good.
Good. Well, we all wanted to make this topic because we've been having questions in the last week or two. People have been texting us and calling us and DMing us, messaging us. Hey, have you seen things? Literally, as we're on this, I'm talking to a good friend of mine who is in the lumber department, and she has a lot of lumber stuff, and she's telling me what the lumber market is doing. I like to keep up to date with all that and just see what's going on, and the market shifting. There is a shift with sellers, but then it also goes by per marketplace. So we're gonna dig into that. Guys, I have a lot of questions for y'all. I'll be the moderator today, and I'll say a couple things myself, but I want to be able to give back as much as possible. That's the goal of the Real Estate Power Play. So if you have questions, if you have thoughts, and this is live right now, if you have anything that you want to know that's current, we'll be able to help you out. And if you're listening to this on the replay, then just reach out to us. We're easy to contact. So Repositioning, one of my favorite podcasts. Hey, dude, what's up, Ken? I just talked to him the other day. He's always crushing it, doing cool things. All right, guys. So let's just jump in here. So reposition yourself. as the market's always changing, right? And one of the things I noticed, and we talked about this before, of just how fast you need to reposition yourself, how to not be stayed true all the time on your old model, your old structure, your old strategies that are all tried and true, right? They work for you, but as things change, you need to change. So let's go into big mindset first of like, what is something that you see mindset wise or maybe thought wise that you're going, I have either been here before, or you are now telling your team or your friends, you might want to start thinking about a little differently. So Ronnie, I'll let you go first here. What is something you might be talking to your team about, or some of your nucleus?
Yeah. I think the big thing with, there's so much fear out there with the market crash, which is very valid. There's a lot of things happening with a coming recession. And from our end, one of the things that we've kind of started to discuss is the idea of cutting the fat, right? And the idea, and I think we've all heard that, but it's not been something that I feel like has been brought up a lot in the last 3-4 years, right? Where this idea of cutting the fat is not like, yo, cut everything out, but it's, hey, if we would have spent 2 hours with this type of guy that's not doing it, like spend an hour with them, right? If you're consuming the news and you're freaking out, instead of spending, an hour and a half, spend 20 minutes. Right. And the idea is just anything that's sucking energy, money, resources, limit that, right? And be very focused on what we are spending money on, rather than, oh, that consulting over here that we might have spent $3,000 8 months ago, we can hold off on that, right? Like, what's the immediate return on the dollars that we spend with where we're coming? So that is a mindset thing that I think should be at the forefront of people's minds. And I'm excited to jump into this because I've got quite a bit as far as positioning and what we're doing to position. But just that mindset of, guys, think of ways where you can run a lean operation, right? Rather than one. In good times, it all looks good, even if you're running a bad operation. But in bad times, you get exposed. And I'll talk a little bit more about that later and what to do. But that's a new mindset shift.
I want to chirp into something that those who don't know Ronnie's operation, he used to have a rather big team, 15 people or something like that? So I would say that was a pretty big operation for what you do for fixing and flipping. That's more than most, for sure.
Well, that's not even that team was not the rehab crew either, right? That was internally, not even the construction element.
So you have that, and then you have all the way to the other side that Mark and I kind of operate as a lean, production. It's really where I came from, and Mark has definitely helped us out with that. So if you guys will have any thoughts towards that, Mark can definitely help you out. He's actually, I was just commenting and giving Mark a good compliment this morning, going, dude, I helped out some people yesterday on did a full training with them and their operating system because they're good friends of mine in commercial space. And a lot of, like 50% of the stuff came from me learning from Mark and the ways Mark can put stuff into practice so fast. But I think it's because he's operated lean so quickly. So Mark, what is your perspective right now, repositioning right now with the market? High level. We'll go into the nitty gritty in a bit, but what are you seeing to where you're like, I need to talk to people about this?
Well, quite frankly, I'm excited with the shift and the slowdown. There's going to be a lot of opportunities coming about. So that's that. I'm kind of excited. I've been waiting for this market to shift. Now, some markets, are not shifted yet, and some markets have. So wherever you're listening to this area, might be saying, what are you guys talking about? My market's still hot. So if you follow the data out there, last month, listening to CNBC, and plus, Gabe and I were just talking about Jamie Dimon the other day. So he's forecasting. So you should definitely be in tune of what's going on with the economics of, especially as a real estate investor. I posted something a week or two ago and they're like, oh no, we're still cranking, the survey of it, and it just showed like some people they're seeing it in their market and hot, and other markets are slowing down. So with the interest rates going up, and like Jamie Dimon mentioned, and then the fuel cost is outrageous, it's just bound to happen. And plus, in 2 weeks here, the Feds are going to bump it another 50 bips they're talking about. So I'm excited about it. What I've been doing is just going back and on my land development stuff, going back and renegotiating my contracts that I currently have under, and shifting more of doing JV with sellers, because I don't know how long it's going to take to go through and sell these on the other end. So I'm excited about it, quite frankly.
Yeah. And so you hear that. So for those who are listening, pretty much we've all been through, most of us have been through the 12-year cycle of things are going good and things are good, and we can acquire properties and we can do a lot of different stuff. So we're about to enter into a season that's quite unique per marketplace. I'm in the Houston metro area, and it's kind of weird. I'm getting discounted properties, but then we're also selling properties at the listings dollar amount. So it's kind of unique situation. I think it just depends on where you're at in the market, and the type of sellers that you're approaching and the type of properties that you're looking at. So to kind of go into the assets, so the properties, we're talking about real estate investing, right? So when it comes into the properties, Ronnie, how are you changing the way your team and you are assessing a property, looking at real estate?
That's really good. So what we are doing is we're being a lot more picky, specifically about the area that we're buying a home in. In West Michigan, we haven't seen a big dip or turn in the market. Things are still fairly hot, but it's hot in specific areas, right? Other areas are slowing down, where there's certain areas people really want to be in. And so we're being really picky on the types of homes that we're jumping into, getting into nicer, affordable homes rather than kind of the cheaper properties.
What does that mean?
Yeah. So what that means is like you can get like a 1920 house that's like a 3-1 in Muskegon with a resale value of $130,000 for like 30 grand, right? And then put $60,000 into it and resell it. Well, those areas are actually harder to sell, right? It's not as desirable to be in. They'll sit there on the market. That was the one I just looked at yesterday. They'll sit there on the market for a little bit more, even though you're seeing, hey, things are moving quickly. They're not as desirable. Where we just picked up one on Saturday, just contracted it in Coopersville, which is about 15. Well, Coopersville, there's literally nothing on the market, and it goes in like just a couple of days. Well, that's a resale of $230. The house literally next door sold for $230, and it's not as nice as the one we have, and we have a little bit more land. Those houses you can still list, and people want to be in that area because it's close. And so really that location aspect is, I would say in my market, tightening a little bit of, you know what, this is a more desirable area. This is a more desirable type of home rather than, this old home that's kind of falling apart. So we're just being really picky on that side. As far as ARVs go, I'm not pulling back my potential resale in certain areas. I'm still actually giving myself a little bit of a cushion, but in areas that are longer days on market, a little bit more out, if they're a little bit more rural, then I'll start pulling back and being conservative. And I'm actually looking at, I just passed on one last week, because even though the comp showed a certain ARV, there was actually like 9 active properties in the neighborhood. And so my competition with other properties, it's like, dang, I'm going to have to price it competitively. So it doesn't matter what the ARV says, because there's 9 actives. Right. And so so we're starting to look at some of those details when we're buying properties.
Yeah. And for those who don't know that, it sounds like that wasn't Ronnie's protocol before. And I totally get it, because as you're looking at properties, you just notice new things. Like, you know what, let's make sure the actives, compared to the neighborhood where there's a bunch of pendings, but there's no actives. And that lets you know it's a hot neighborhood, because everything that's on there is pending within days. So if you wanted to look back at that, and whenever you guys run comps for the listeners and the viewers, that Ronnie is basically sharing with you some golden stuff of like, okay, well, this is what you would want to do from here, maybe till the end of the year, right?
Yeah, well, and if I could add on to that, in a market shift, and the reason why we want to take an additional diligence is the people who are lazy, the people who are arrogant and I'll just make it work, and the people who are over leveraged in their properties, those are the people that are going to be filtered out, right? Those are the people that are you won't see them in 3 years, right? They will no longer be in this business because they're lazy in their approach. They've made easy money the last few years. And they're over leveraged. We know multiple people that have over leveraged themselves, and that being over leveraged can drown you if you're not careful. And so that's just something that we want to just add a tinge and then gradually tighten as time goes on.
That's cool. That's cool. All right. Well, Mark, it's your turn to share your wisdom. What are you doing with, I know you're talking about renegotiating. Before we go there, how are you assessing these things now? Are you going to be looking at them with a different eye, kind of like Ronnie was talking about, or what's your view?
Yeah, absolutely. So I don't think the market is going to like really pull back. I think it's just going to take longer for things to move. I don't think we're definitely going to go into like 2008. And then I'm also like, it's by market conditioning. And then also when we're looking at land development compared to what the average homes of sales, say it's in that area, they're selling for about 400,000 or 500,000. We're looking at putting different products on there, something that's more affordable, because the housing demand for the more affordable and the 200,000 to 300,000 range is still in high demand, and it's still going to be, that market's still going to be there, but the other market is going to be slowing down. People are not going to be selling their $400,000 home, when their interest rate's at 3%, and then turn on buying something else when the interest rate's at 5.5%, 6%. It just doesn't economically make sense for a lot of these people unless they have to relocate for jobs. So we're looking at doing different products on those properties. The other thing is we're starting to shift back into, the residential creative side where, my lease options, they're starting to pick up, so as you guys know, that's how I got into this business, is doing lease options many years ago, sandwich lease options and whatnot. So what I have one of my JVs doing is he's looking in markets that are slowing down and seeing houses sitting on the market for the longest. And so we've actually have 7 offers in the past week out just on those. So we're focusing on the markets that are shifting and slowing down, where sellers can't move the property as fast. That's where that strategy comes in. So I like I said, I love that type of process. And then, when I'm also evaluating, that's why I'm looking at doing more JV with sellers. So instead of being crunched on a time frame of got to close immediately, if it takes a little bit longer to close, we actually don't have to purchase the property from the seller. We're actually partnering with the property with the seller, and we don't have to put earnest money down. Like an example, we're looking at one deal where the seller wanted 1.5, and after you negotiate, you could probably get it for like 1.2, 1.3. But doing a JV with the seller, he's going to be roughly about 2.7 now, making the profit money on it.
Wow.
However,
and that's for land.
Yes, on land, on a development property. So
Right.
How we're structuring it is every time we sell a lot, they would get a portion paid back.
That's cool.
Does that make sense?
Yeah.
Yep. So that's how we're structuring the JV deals with the seller. So they're going to take a little bit longer. They're going to be in it, but there's more meat in it. So it just takes time. So if they sell quickly, great. If it takes, a couple years, 2 or 3 years, they still have the money coming to them. So that's kind of how we're positioning that.
Cool. Guys, I want to just highlight the fact that, and those who are listening, to our listeners, just the power of being flexible in your area. So, there's a part where you have, this is my niche, right? This is something I'm good at. And if you're new, you really don't know your whole niche. You just need to jump in, get your feet wet, start going, baptism by fire type stuff, like go after it. But there's also a part, like whenever I've noticed where, and I've seen it multiple times where like, this is how I made my money in the last 5 years, and this is how I'm going to make it in the next 5 years. And that's not necessarily true. Like one of the things I like about just you guys and being around y'all is it helps me be more flexible in my thought process. Have you thought about this? Have you thought about that? Hey, I'm doing this over here. This is what my market's doing. Or, just the idea of slower markets are better for lease option. Oh my gosh, that like, as I'm working, doing my business, my normal day to day, I forget that there's another market that's slower than mine. right? Because I'm used to the hotter market in the Houston metro. And those markets are great for picking up different types of transactions, right? Different type of assets. So that's one of the things I love about hanging out with you guys is just learning how to be more flexible, right?
Good.
And so to keep going in that direction, what do you guys see? I mean, how are you guys going after a wholesale deal or a flip deal or
yeah, so I think it really, rooting your view, Gabe, and is rooting it in history as well as, a potential view and argument on going into the future. So I like to look at like, okay, worst case scenario, what happens? And, if you look historically across the nation, things essentially dipped in 2008. Things dipped between 12, I wrote it down, it was 12.4% and 33% nationwide, depending on where you were from house prices, right? And so if you look at that and you can look at your area and say, okay, what's a realistic dip worst case scenario, right? Is it 20%? Well, what does 20% really mean? On a $240,000 house, that's like 45 grand. Right. So that means a $240,000 house dips back to 200. Okay. Or 190, let's say, worst case scenario. So let's say in that scenario, I buy the deal, and let's say because the cool thing about real estate, it also doesn't dip overnight like the real estate market or like the stock market does, right? It dips in a quarter. It trends downwards based on listings and the resale and the supply and all of that. So what I like to do is say, okay, well, if I do this, worst case scenario, prices drop in my area 18%, right? So that means the price could drop 30. Well, if my average profits, if I have an equity built in of 40 to 60,000 and I'm under that 300 grand mark, okay, I still have the ability to offload it and price that ahead of the market, which allows me to exit when I'm flipping, especially when I have short-term loans. And so for me, that's what I am constantly looking at is, okay, worst case scenario, it takes me 3 months to remodel this property, which we're doing it faster than that. But worst case scenario, it takes me 3 months. This is how much I'm into the property. This is my equity spread. Okay, what does that look like? What is my equity spread? Could I offload it still if we experienced a 15% dip, a 18% dip? Could I drop the price to price it? If we're coming down, could I price it here so it goes fast rather than back here hoping to get my number? And so that's a huge aspect of what I'm looking at when buying the properties. That's why I'm looking for certain kinds of properties, certain kinds of spreads, things where I think I could do it more. But then my worst case scenario, okay, worst case scenario, I sell it here and I don't just break even, but I can still make money. I can still pay my team. And there's a little bit of stuff to pocket for myself. And I think just being that ties into that is urgency. I was just talking to a guy, I think 2 weeks ago, one of my lenders, and talking about just how important it is to be just aggressive, just patiently aggressive, right? That you're being conservative in your estimation, but you're not. I just literally spoke to my brother this morning about a property. We're hiring one project out because we got 4. And it's like, yo, we need to get this one knocked out by somebody else so we can just dive into these others. Being urgent with your work and not delaying, not waiting, but getting it done today, I think will also factor into those who win and are able to capitalize during the filter out process.
That's great. I just want to piggyback off of that.
Do it.
That was great. The other thing is, I just want to mention that is also when you have a deal being urgent, but also before you get into a deal, be patient on that deal. Just don't hurry up and jump into it unless it's a home run deal, but be patient. Let the deal come to you and push back, if need to be, because if the deal is a good deal, one of my people I'm working with right now, he's got some capital he needs to put to work. And he's like, oh my God, I got to put this capital. I'm worried about, concerning about it. I'm like, just be patient. The deals will come. You'll have better opportunities that will come down the road. Gabe, I want to ask you a question. What's amazing is we actually had this conversation back in February at the that mastermind that we went to.
Right.
And we're, everybody, how many people were there? About a couple hundred and high level. And talk a little bit about that, like what that conversation was during that and what you got out of that.
Yeah. So the idea, so that was a commercial group, and we do, a lot of them do very high level commercial properties. And, and I'm still learning commercial for those who don't know. So I'm always looking for commercial properties, light industrial, stuff like that. And so as I'm going through this stuff, I'm listening to everyone talk about getting ready for the season. And it's crazy because they've been talking about it for 2 years, like 2 years from last February. The moment COVID happened, they're going, they can see the future. And that's what I love about looking at business in a longer range of going, you can kind of read the future, right? This has happened before. This is typically what happens. There's a default at some point. There's shopping trips that go, some of these things go vacant. What happens? People got to make those payments. There's foreclosures. People can now start moving other people out because there's not a hold on foreclosures anymore. It's just stuff like that. And one of the things was like, if you have something that you want to get rid of, that you would just say, if you would hold on to it for 7 to 10 years, would you still keep it in your portfolio? Like if you had to hold on to it for 7 to 10 years, would you still want that property? And if the answer is no, then get rid of the property now, because you're not going to have another chance for another 7 to 10 years to get rid of that property at these dollar amounts that we're at now. Now, can you still sell it? Yes. I have some assets right now that I'm looking to liquidate just because I don't want to hold on to them for 7 to 10 years. So we're moving on from some of these properties. And I just talked to my wife the other day and I'm like, this one I want to get rid of and that one I want to get rid of. We're going to keep these ones. We already refinanced a lot of the properties. Like February was just the beginning of rates kind of changing a little bit. So that was great that we're able to go and get those good rates back then. So that's one of the things that we did. Now, here's another thing for those who are listening, and you do have some rental properties, you still have time to go in and refi. Still getting a 5%, 5.5% isn't bad on an investment property. There are some people who bought investment properties at 6.5, right? And so it's still not bad. I mean, you got to keep in mind, we're talking about creating net worth. It's a way for a savings account. It's a way for you to accumulate, especially if you're in your earlier years. I think it's a no-brainer. If you're under the age of 35, this is a no-brainer just for you to go, okay, what's that 5.5%? That's fine. Eventually, it could come back down and you just refi then, right? Like things are going to be okay, right? So it's not the worst of the worst. What we're talking about, though, y'all, is there's going to be opportunity, right? So that's one of the things that I started noticing of like, let's get ready for the opportunity. Mark and I love having this conversation because he's like, if you notice, like Mark has had 2 cycles of just sharing like, look, the opportunity comes. This is what you would want to do. You don't want to be in a spot. I just want to remind everyone, if you're in a spot of like being over leveraged right now, I would get rid of whatever's that's causing that. You're not going to be able to have the bandwidth, the mental bandwidth for you to take advantage of the things that are going to be coming. And if you have some cool opportunities like rental properties that could be coming up and you're going, well, I can't sell it, but I'll be cash flowing. Oh, it's only going to cash flow $300 a month, but it's in a good area. It's that perfect property Ronnie just got done talking about, but now you can't sell it or you're not going to make the profit you think you can make. You're going, well, I'll just hold on to it for 4 or 5 years. Like, it's not a bad deal. It's still a good deal. It's a net worth thing. It's a great thing. So we all have different views to look at it, but the major view we're looking at right now is helping those who are listening to be ready to position yourself for success. And Ronnie mentioned it, cut out all the fat. Just start getting rid of some of the junk. For me, I was doing that in the beginning of the year. I talked to a couple of my mentors and we were just kind of like, I kind of shared my portfolio and we're just like, okay, these ones, let's just get rid of. If you can't refi something right now and it's a hard property refi, just sell it. It's always going to be a hard property refi. And we are doing, my wife just came in this morning. She's working on a loan for one of our properties and she loves asking the question. And so if this is a quick tip for those who don't know mortgage brokers and don't talk to them. A quick tip is, build a relationship with them, and ask them, hey, what are you seeing right now? Right? Listen to the people that are giving out money. Isn't that a genius move? Right? Go talk to the people that are handing out money and saying, hey, are you noticing anything with the people you're handing money to?
So, Gabe, I have a question for you, because I think this is a great point that segues into being prepared and positioning yourself. How important is it to become, in our current season, bankable? Like, would you be worried about being bankable? Would you pursue being able to have a relationship with banks? Or would you say, you know what, we don't necessarily need that at this time? In positioning yourself, how important do you think it is to become bankable going into this next season?
So I think being bankable is huge, no matter what season you're in. I've had to learn this the hard way. And here's the thing. Good business people are bankable, right? At the end of the day, you should be bankable at some point, right? And if you're not, the only people that are going to tell you isn't your accountant, right? It's the people that are talking to the underwriters that are financing your properties. If you're a private money lender and you're lending to me, all right, we're basing things off of the asset, that one asset. And that asset is a prime property, because I wouldn't buy crappy stuff, right? I wouldn't buy anything that I can't get out of. That's for sure, right? That's what we do as real estate investors. So, but the people who are going to really help you launch forward, like let's say if you're looking at buying a bigger piece of property and Mark's looking at these big land, $2.5 million pieces of land, and how do you finance it? And okay, we're going to do seller financing on this part, but we're going to need financing for the actual construction of it. At some point, someone has to go to a bigger lender, right? And once you get into the millions, it stops becoming one person. It starts to becoming multiple people or an institution, right? And so at that point, if you know that day is coming, why not think about it today and go, well, what's the first step? Let's just go open up a bank account with the new bank and say, hey, what kind of lines of credit do you have? What do you need for lines of credit? Oh, you need these 5 things? Cool. And what you find out is that pretty much all of them ask for something similar to the same thing, right? And then you can go in and you'll start building the relationships with those people. You could even do it now and say, what kind of lines of credit do you have right now? What's interesting is that we're doing this and we're finding that there's newer lines of credit. There's new programs coming out. The government is doing some assistant type programs with banks, right? So don't think that this is just off the table, because they want commerce to keep going. They just don't want to run on the banks, right? They just don't want to lose their money. But if they think that you're good, then you become bankable. So I think it's a process that takes time, something that cannot happen overnight in my experience, unless you're a high earner W-2, which I wasn't when I got started.
That's really good. That's really good, man. Mark, you have anything to add to that?
No, I think that was good stuff. You know, as you guys know, my background is from the real estate banking world. So, and that is very key. And I've actually, you know, that's when you start to see when the lender's starting to tighten up the guidelines, where you start to see the market shifting. It hasn't happened yet. So that's kind of a good thing. Actually, I was just talking to one lender. He's saying that the jumbo rates are actually lower than what the conventional rates are right now. So that's kind of a good thing out there.
Yeah, they're trying to move the money.
Yeah. Well, and the money is flowing to certain types of people too, right?
Right.
And I think it's you know, people aren't necessarily reaching, it's people are making more money today because they're capitalizing. I want to touch on something, guys. We're talking about, you know, repositioning yourself, and I think we've all done this, and I think we've done this intentionally. But I guess I don't know the right way to ask the question, but finding people to run with, right? Like finding the community that you want to be a part of. Like
your tribe.
Yeah, your tribe, right? I have over time realized that is so important, right? I would say in the last year and a half, I would say mainly from you two guys, you two and Marty, just realizing how important it is to run with a group of guys who are on the same mission, who have your back, who understand the strategies, but also can be resources and check you a little bit. what would you say to the guys who are out there like going and trying to get through this? What advice would you have with finding your running mates, right? Finding the people that you're connected with and you're listening to in that inner circle. One, I guess, how important is that? Two, what would you do if you didn't have people you could bounce stuff off of? And what do people like? What should they do in order to build that up?
Who want me to grab this?
Yeah, go ahead, Mark. Yeah,
perfect. So yeah, it is critical to have your support in your network, or what Gabe says, your people in your tribe, if you will. It's what makes all of us successful and helps us grow. And you want your people that you surround yourself with, you want them to succeed. You want them to grow, because if they are, then you're growing with them. I always recommend, wherever you're at in your stage of investing in your experience, to find people around, a group of people around your same caliber, and then each of you guys come together and have them always network with other people and find different mentors, so you share each other's knowledge to kind of bring everybody to the table. Because like, I have different mentors that I've always looked at. I know Gabe has, Ronnie, we all do. And then we all come together and, oh, we learned this, we learned that, and Gabe's like, oh, you got to come to this mastermind up in Orlando. The people are incredible. So it is extremely critical, and always constantly keep building your network. It's what really makes you in your Ronnie. I'm sorry, Gabe, you got you want to add to that?
Yeah, like what would be the first steps to that, Gabe?
Okay, so let's do a step process. Yeah, so let's say for Ken, he's probably 22, 23 if he's still listening. He'll probably listen to a letter. I talk to him about once a week probably now, and just kind of helping him go through and others. So step process is one, understand the energy level that you're at. This is not a coincidence that we're all on this. This isn't a coincidence that when we get Marty on here, there's so much fireworks happening that will end 1 hour session and our business grows. Our business grows from this podcast, just being around together and listening to each other. And I'm going, I want to implement this. Yeah. Right. Ronnie said something, Mark said something, and we're just around each other. It's not a coincidence that when you get on a phone call with somebody that's like energy, that's like the momentum, the velocity that you want to be at, or that you're learning, that you become more connected. I do want to say, don't be too shy about all of this. Like, you do have to reach out. You do have to give. I'm a big proponent on giving, and make sure you have a big give to like being part of another circle. I mean, if you think about it, and someone wants to be part of this three-way conversation, right? And if they want to do this, hold on, my phone's. If they want to be part of this three-way conversation and hop on, they would have to give something to some degree, or just be willing to be quiet and ask questions. And then I'd be happy to give. But if you're coming in and you're having like a degree of like, I already know this stuff, or already know what I'm doing, then it tends to be a little bit more of a repellent. So step one is, I would say, do a good quick assessment of yourself, of what you need. 2, figure out where that's at. And 3, don't be too hesitant to raise that standard and go, well, there's another group that's above me. I feel like when I have two major mastermind groups that I'm part of, when I leave both of them, I feel like the biggest goofball. Literally, I have to watch my phrases when my wife goes, hey, how was the call? I have to watch myself and go, I feel like an idiot. Like, these guys know so much. They're like, okay, I just bought a $25 million property and I'm doing this. I feel like the goofiest person in the world, right? But I'm giving stuff to them, right? They're like, man, I'm glad when you show up, Gabe, you bring a different dynamic to the group. And I'm going, you guys have all the properties, or you guys do all this other stuff. And I'm talking millions and millions of dollars, way above me. And so tens of millions at this point. So I have to be willing to leave those conversations going, you know what? I'm still learning. I'm still in the process, and this is fun, right? And okay to be embarrassed, because they do hold me accountable a little bit, and that's okay, right? Because I'm in the growth mindset, and I'm ready to grow. And then, like Mark said, it's the most important thing. Your tribe is so important, right? And when I talk about energy level, I just want to, like, this is my own tangent. I'm here. I'm in the pool. Mark is asking me 50 questions about my freaking process of how I'm selling something. And he won't let me finish talking the sentence because he's already on the next thing. He's like, okay, so you do. I'm like, would you let me just think real quick? And he's like, dude, come on, let's go, Gabe. Let's go. And I'm like, hold on. I don't even know my own process that fast. Hold on. Let me see. Then I do this. Then I do, because he's asking, because he's already ready. He's already at the, like, you know, when that momentum and that cadence is going, he's already ready to receive the information. Okay, where are you at? There you at? There you at? Okay, cool. I didn't know you could do this. What's the protocol for this? What's the criteria? And he's just asking the right questions. When you ask the right questions to the right people, you're going to get an answer, right? And it can transform your business, right? But if you don't ask any questions, you're not going to grow.
Yeah. That's so good. That's so good. All right. So we're about 40 minutes in, guys.
We're 40 minutes in.
Yeah.
Let's see, what do we have here?
So what about your conversations that you have with realtors, Gabe? You know, what is that going to be something a little different?
Yes. I'm glad you asked that. So realtors and sellers, I think Ronnie probably has a couple things also for just sellers, but you know, I have more of what I call a boutique business that I have people call me. Like I like it when people call me. I don't do 1,000 text messages a day anymore. I don't do as much reaching out to direct to sellers. I have just brokers, realtors, contractors. I have a lot of people that I just have a system that I've been doing for 5 years now. So it's been modified. So the conversation nowadays is like, you got to keep in mind that there's a phrase that it says, if you understand the seasons and the times, right, then you know how to act in the season and the time that you're in. Well, we're in a transition season. Okay. So now we need to act differently, right? So now we need to start asking people and sellers different questions. We have a common denominator. Did you see what's happening in the market right now? Simple question. Hey, how is that market happening for you? Right? Hey, what are you seeing in the neighborhoods that you're driving through? Mr. and Mrs. Seller, right? Say, how's your neighbor's house? How are things going on in your neighborhood? Like, I'm not scared of someone coming in and saying, well, my neighborhood's still hot. Say, okay, cool. But your house is in disrepair, right? That doesn't bother me. But when it comes to like a broker and we're looking at like commercial property and stuff like that, this is the most basic common denominator of like, hey, how's your market doing? Right? Hey, Ronnie, how's your market doing over there in West Michigan? Right? How's that West Coast going? Right. Well, it's pretty good. Okay, cool. Is that all the way up and down? Okay. Is the lumber like that? That's why I like to know market conditions of certain stuff. Like, are you guys still okay? Cool. Is how's metal? Like, how's just metal costs over there? You know what? I don't really know much about metal costs. Okay, so they don't know that. So what do I find to create a common relationship so that way we can create the conversation going? And once you find, it's kind of like a long time ago, we used to have these radios, and these radios had a dial, and these dials you'd have to go and figure out, and the little needle came back until you found the radio station, right? You guys remember those? Or you seen a picture of them or whatever? So all you're trying to do is find the frequency that person is on, right? And you're using this market to have that conversation, right? And so that's one of the things that I have been doing differently in this coming season. Of how I'm just talking to people. It's just allowing the current situation to happen. It's kind of like saying, how's the weather? So that's it.
I like it. So let me ask Ronnie one quick question here. Because, Ronnie, you've been at this for quite some time. For wholesalers and people new in this business of, how should they be looking at underwriting these wholesale deals and like the ARVs? And you kind of briefly touched on it earlier, but I think it's kind of important. And that's why I just want to kind of, close on it, if you will, and just kind of go into that a little bit more on that, if you don't mind, just kind of how to protect themselves and how they look at those deals.
Absolutely. Like a wholesaler, as you're going in, when you're getting into the business or you're wholesaling, your main client, obviously you're dealing with the sellers, but your main client is your buyer that you're wholesaling the property to, making sure that those buyers want the properties. And so you just need to, when you're going in, make sure that it's deep enough for the investor. Protect your investor. If it starts pulling back and the market starts going down, look at the pending properties, look at the active properties, look at what's selling recently, and guys, you want to pull back, because at some point the music's going to stop and everyone's going to be scrambling. And if you're the guy who's got the system where you're buying them deep enough, where your wholesale fees might be a little bit higher right now, but you're able to drop that fee a little bit or get a deeper discount with the seller, that's the way to go. If you guys can start getting used to negotiating at a 65%, a 65% discount, and obviously it depends on the per market and where you're at in the market. But if you can get used to getting properties in that range, 65 to 75 cents on the dollar, you're not going to hurt for business. And if you can get used to that conversation, that's going to be really good. And guys, just a quick tip. I've been looking at like marketing and looking at just the market shift. And one of the things I think is really underrated in the building relationships, especially with a seller, is giving gifts, right? Using reciprocity to really help you. And we're adding that more, where when we meet them, hey, we might, increase and change our business cards where they're metal business cards. We might look at, okay, we're going to give leather notebooks or bags, something that when you're there, it actually impacts them from a giving standpoint. There's a really good book called Giftology, if you guys haven't read it. But it's about tailoring gifts and knowing when to do it, especially to people who are making you money, right? And the way to think about that, especially on the wholesale side, anything to set you apart, is what can I do? Like, how much does this person mean to me? Are they $20,000? Are they $10,000? Are they $5,000? Whatever that is. And then let your gift be essentially like 2 to 5% of whatever that client's cost to you is. And that can kind of help gauge what you're willing to spend on them. This isn't for marketing. This is people you're trying to build relationships with after the initial touch, so you can do business together and make money together. And so those are some just small ways that I'm looking at from a discount and to set yourself apart.
Guys, that's a lot of information. That is really good. So those who are listening to this, you probably have to go back and re-listen to different areas to reposition yourself for this year. Now, as we move forward, guys, we're probably going to have multiple of these conversations of like as things shift, the market changing and everything. So come back, connect with us. If you have questions, if you need information on deals, if you have anything that you want us to talk about, we'd be happy to go over that. Share with your friends if you think this is good content. Like it if you think it's of value, and DM me if you don't think it's of any value. I would like to find out what your view is. So, guys, thank you so much for joining in. Thank you, Mark. Thank you, Ronnie. You guys are awesome. I appreciate it. Have a blessed, awesome week, and go get it, guys. We'll talk to you later.
Yeah, I'm excited.
All right, guys. See you.
Peace out. This has been another episode of Real Estate Power Play, guiding real estate entrepreneurs to a brighter future. If you liked what you heard, consider subscribing wherever you listen to your podcast, or follow us on YouTube at Real Estate Power Play.